What we have is that, we said that for the last couple of sessions and for this session and the next one or two, is that we would look at talking about how we go through sort of utilizing the sort of 10 steps that we've covered over the series so far, and about how that actually sort of plays out when we actually just sit and look in front of our trading charts. So if you remember, we talked about, the importance of having a nice little routine, little process that you can follow that will enable you to sort of trade to the best of your abilities. What we talked about was, we sort of 10 steps, okay, in the mastering 4Ms of trading. Namely, the first one is always define your levels of support resistance when you look at a chart. Find if there is a trend. Step 3, wait to see if price reacts, at that key support resistance levels. Step 4, look to see price action signals at those particular levels. And step 5, see if that is part of a bigger chart pattern. Those are the kind of 5 simple steps that you should be looking at, doing on every chart that you open up, regardless of whether you're a weekly trader on gold, a monthly trader on sort of oil, or a 5-minute intraday trader on euro dollar. These are it's good process, good routine. That's what I wanted to get into, so that it becomes an almost automatic response. What we also talked about was the sort of the back 5, namely being the sort of the 5 R's, namely that it's about risk. Okay, always make sure you define your risk, accept it, stick with it. Step 7 is a reward, about understanding what kind of exit you're looking for should your trade work out, whether it be targets or trailing. And then step 8, we covered about keeping scrupulous records. Step 9 was about reviewing, it's sort of improving your performance by debriefing your trades. Step 10 is all about repeat. Consistency and discipline are key as a trader. Very difficult to be consistent without being disciplined, and likewise, it's difficult to be disciplined without being consistent. So, these 10 steps were just a very simple process and routine that you can start to sort of utilize from today, sort of develop and building your own little trading process. And that's what we're focusing on in this session and the next few, just to basically just get clear on that and show how we actually turn that into a way to work with our charts to identify good trading setups. So, what we've talked about is, looking at the asset classes that are of interest to us. Today, we're going to focus actually on the FX pairs. That's what we're going to look in particular. So, what we look at is the dollar index, okay, and then we have the 28 other major pairs that you can see there that are made up of the sort of 8 major FX pairs. So, we've got pound dollar, pound yen, pound against the Swiss franc, pound against the Aussie, pound against the Canadian dollar, and pound against the New Zealand dollar. We'll have euro sterling, euro dollar, euro yen, euro Swiss franc, euro Aussie, euro Canadian dollar, and euro New Zealand dollar. The dollar Swiss, dollar against the yen and the Swiss yen. Also Aussie dollar, Aussie yen, Aussie Swiss franc, Aussie Canadian dollar. The dollar CAD, the dollar yen, the Canadian Swiss franc. Finally, the Kiwi dollar, Kiwi yen, Kiwi dollar against Canadian dollar, and the Kiwi Swiss franc. So that gives us 28 major pairs, and so there's plenty of opportunity there for us based upon the sort of 10 steps that we've followed through and what we're looking for in terms of price action signals. And that's what we're going to focus on today. I'm going to show you how I set up my profiles within my MetaTrader, so you can have a look and utilize that for your own trading, plan. So, we also looked at over the last few weeks. Okay, we looked at, I think last week we did indices. Okay, we looked at the how to set that up as a profile. The week before that, I think was what we looked at equities. Okay, and then we also looked at commodities, and then next week we'll have a quick look at crypto as well. As always, these sessions, they're recorded, and you can find them on the Admiral Markets YouTube channel or the Admiral Markets Global Facebook page. You'll find them there to sort of look upon. So you can do that and go through how we set up those profiles. But as I said, we're going to focus today mostly on just looking at the sort of the profiles for FX pairs. So if you remember, we talked through it. I want this to sort of ease itself into your brain so that it becomes your natural way of operating in markets. Step 1. Whenever we open a chart, the first thing we're going to do is look to define levels of support resistance. So we look at monthly, weekly, and daily charts, draw in our horizontal levels of support resistance, and we can also add in, excuse me. We can also add in particular, important psychological round numbers like 120, 140, right? So pound against dollar has been batting around about 130 at the moment. Dollar yen has been batting around about 110, 111. So, these sort of psychological round numbers become important to us. And for new traders, if you want, you can also use fractals to help you with with defining levels of support and resistance. Step 2 is always about how to define if there is a trend. And if you remember, we talked about how, we want to see high highs, high lows. We want to see, prices above the sort of the 50 and the 200. That's a very simple way to define that we are in an uptrend. And as I say every week, good trends will leap off the charts at you. Okay, it's about you being able to identify when is an instrument consolidating, when is it range bound, and when is it actually sort of breaking out and putting in a nice trend. And as I said, good trends, they don't happen as often as we'd like, but when they're there, we can see them very, very clearly. Step 3 was about, waiting to see how price reacts to the key support resistance levels. What does this mean? Well, it also actually means that, we're just looking for a confluence of events. That's what we're looking for, 2 to 4 things to come together, okay, at a particular key level. That could be something like, the breakout of a large chart pattern. That could be a nice price action signal happening at a particular level or a particular psychological level. So we get 3 or 4 things coming together at one time and place, and that is where we start to get interested in our price action setups. So if you remember, step 4 is to look for price action signals at support and resistance. And we spent lots of weeks looking at particular just simple trading setups because, ultimately I know traders just like to see, trading setups. We all do, okay? And none of us ever get bored of it. We do enjoy them. So remember all of those particular setups, we covered them on individual weeks and the sessions. So then you can find them on the, as I said, the Admiral Markets YouTube channel or the Admiral Markets Facebook page. So we looked at things like pin bars, engulfing candles, inside bars, 3-bar reversals, key reversals and momentum reversals, KDRs, key day reversals, and a combo with the 1, 2, 3, and also the power of the 20-period moving average, and simply the 1, 2, 3 pattern itself. Then step 5, if you remember, ladies and gentlemen, was all about that. It's a case of, we looked at, was price action part of a bigger general chart pattern? We looked in terms of continuation patterns, things like bull and bear flags, ascending and descending triangles and symmetrical triangles. And we looked in terms of reversal patterns, things like head and shoulders, double top and bottoms, and triple top and bottoms in particular. As I said, those particular sessions, you can find them on the Admiral Markets YouTube channel and also on the Facebook page. So before we switch across the charts, just what we'll be touching upon as we go into Q2 and Q3 is actually just talking about we'll be focusing a little bit on how we manage ourselves, how do we get the best out of our selves in terms of trading performance, how do we manage performance, how do we recover from a slump, what do we do to actually go on improving performance as we go on. We'll talk a little bit about shorter term trading and also a few advanced trading tactics based upon the setups that we discussed earlier in this webinar series. So, as always, remember that we want to see you managing the 4 M's of trading. That means you need to be aware of what's going on in your markets, method, money, and myself. Make sure they're all in alignment with yourself, okay? If you're struggling, then just work out which one of those 4 M's is the present weakness. Once you do that, well, then you're in a position to sort of drill down and find a better solution to that particular challenge. As always, if you're watching this, on demand video and you have questions about this or any other element of the series or Admiral Markets itself, you can always get in touch with your account representatives. You can call them there on that London number 02077264003. Email them at hello@admiralmarkets.com. You can get in touch. Okay, you watch on the youtube.com/Admiral Markets or on facebook.com/Admiral Markets. So if you just bear with me a moment, I'm just going to switch across to the Admiral Markets MT4 platform, and then we'll have a little look at FX pairs. Okay, so here we are. This is the Admiral Markets MT4 Supreme Edition that I have access to, and as I said, we're going to go and show how we set up particular profiles. Now, I think last week we looked at indices. I'm just going to quickly start there with our indices. Okay, just very quickly, just to build the picture there. As always, it's all about building the picture, ladies and gentlemen. So we've had a nice little move there on the DAX. If you remember last week, what we talked about was, we're setting up particular profiles for each of the sort of asset classes. So we've done one on commodities, okay. We've done one on equities. This was last week. We did indices, where we looked at, we had the three American, okay, Dow Jones, S&P 500, the Nasdaq. We also had the Australian ASX 200 here on the top right. Got the sort of Japanese Nikkei there, bottom left. We have the China index, the A50, the DAX there, okay, and then bottom right we have the FTSE as well. So we've set that up as for our indices, and you can see there it's it's always telling me there at the bottom what profile I'm looking at. I can go up to the profile page here and just select them. And what we're going to do is we're going to have a look at the FX pairs. Now, it is possible that you could, put all of those 29, okay, FX pairs into one particular profile, but I like to sort of set them up by individual currencies, and I'll show you how I do that and how we can and why I actually do that. So I'm just going to go to my one, which is basically US dollar. So, effectively, it took just to simply just take one of the other profiles that we've set up, like the commodities, the equities, or the indices. And then what I'm looking to do is to ensure to have a profile that just reflects the US dollar. So here I have this is the Aussie against the US dollar, the pound against the US dollar, the euro against the US dollar, the dollar against the Canadian dollar, the dollar against the Japanese yen, the dollar against the Swiss franc, the Kiwi against the US dollar, and here at the bottom far right, it is effectively the dollar index. Just pick up this one. Update that automatically for me. So it's not it's important to have a look at the dollar index. Those of you who get the opportunity, you should join me on the real-time daily trading ideas session every Tuesday morning, 10 o'clock London time. And remember that always allows I'll always have a little look at what's going on in the dollar index, because if you're going to be trading FX pairs, you need to know what the dollar index is. The dollar index is the daddy, so to speak. Okay, it's the biggest major currency there that's traded. It's the reserve currency of the world. So you need to understand what it is. And we had a picture that was quite clear here on the dollar index, but you can see actually over the last 2019, it's not been a very clear picture there for the dollar. That's what occasionally happens. And if I just start out here on the monthly chart, okay, just remember what I was saying, just drawing in levels of support and resistance, just identifying extremes, identifying where I can see sort of particular areas of interest where charts and have continuously sort of traded off. I'm always interested in extreme areas, okay, and areas where there's been several different dropping off points or jumping off points in terms of the way that markets react to particular levels. So just drawing in there on the monthly, then going down to the weekly to sort of get sort of tighten up that picture. Just pick out areas that we start to see that are happening there. And by the by, it just starts to that picture just starts to build and gives an indication of what we can look at and where there are particular areas. And if I just look here, if I just zoom in. Okay, here, as I said, the dollar index on the weekly chart. Well, what you can see is, if you join me in the real-time daily trading, as you've heard me talk about how 95 has been a pretty significant level here for getting towards about a year now. Okay, we're getting towards about a year. We can see that it's acted now as a support, but above there, kind of 97, 97.50, they have also acted as resistance. And at the moment, we're just kind of batting a little bit back and forth between it. Okay, we can see that the price action here isn't terribly pretty. It's not terribly clear. That's okay. It is what it is. Okay, it is what it is. The dollar index is the dollar is still grappling its way north slowly but surely. It's still got an uptrend on it slowly but surely. I can tell that because I can see effectively the higher lows. And if I just follow that there, whoops, apologies. If I just look at that here, what I'm always looking at is that, we still have higher lows here, okay? Higher lows consistently here. That's what we're looking for. So there's support there, okay? There is buying support. The 50-period moving average as well is, supporting it, okay? It's heading up. It's heading nicely up, okay? There's a nice uptrend on there. Price is holding above the 20, the 200, and the 50. So we're still an uptrend. The price action might be a little bit scrappy at the moment, not terribly exciting, but it's holding up there, ladies and gentlemen. It's doing what it needs to do, and it sort of kind of will show out, I think, over the next few weeks what likely direction we are to see in the US dollar. So that's what I have. Always have a look at the dollar index, and then, as I said, we can see here for the dollar pairs. Okay, we've just got an opportunity here to set this up, and this is what I like about it, is that I can just basically switch all of these to the daily chart, just quite quickly, quite easily, no problem at all, and almost automatically. What I'm getting there is just a really very, very clear snapshot on what's going on with the dollar. We can see the dollar has been drifting north there. Okay, as I said, it's been a little bit of a messy picture there, but you can see that on the dollar index. It's been strong for the last couple of weeks. We can see it against the euro dollar here. Okay, we can see that there. Okay, that's been dropping. That invariably means that the euro is weakening and the dollar is strengthening. That's what we like to see. That's what it just it kind of what's the word? It effectively just confirms our picture. What we've got here, dollar yen, okay, for the last week or so has been strengthening. Okay, as dollar rises, that means dollar strengthening and the yen is weakening. So very quickly I start to get quite a bit of a snapshot of that. The dollar index may be telling me that there is a dollar strength, but also I'm just getting it confirmed by having a profile that just looks after the US dollar. So very quickly and very easily I start to have more confidence in my trade ideas when I know that I'm trading in line with the sort of the major dollar currency of the time. So in the same way you can set up for dollar, then you can set it up for all of the other major currencies. So quite simply, what you could do is literally you could just find let's say we did sterling next, you could just find all of the sterling pairs here in your market watch and just drag them into your charts here. You just pick it up and drag just once you've got all of those excuse me, once you've found all of those sterling pairs. So I already have a profile set up here, okay? So if I just show this here, okay? And what we have is this is a sterling denominated area. So I've got pound against dollar here on the top left, euro against sterling, pound against Canadian dollar, pound against Aussie dollar, pound against yen, pound against Swiss franc, pound against New Zealand dollar, and the FTSE. So there, once again, very, very quickly, I've just got a quick snapshot of what's going on with sterling, so that I can just take a look and just get in my idea, what we're looking at. Okay, what we're looking at in terms of the sterling starts to give me an idea. Now, not unsurprisingly, here we are. This is 1st of April 2019. The last 2 years have been dominated by Brexit, but certainly the last 2 weeks, what we've seen is, as we got closer to that, what was supposed to be the original deadline, that has actually got, the price of sterling has been very volatile. And I can just see there that myself, okay, is just building that picture that's, again, on the pound against the dollar. I can see here, let's just look at this. I can see that 130, okay, 130 has been a significant level of support, and about 134 above there, and you can see that for yourself on the daily chart. For the last month, price has just bounced its way back and forth, up and down, up and down. Well, so we're in a nice trend now. We're just in a bit of a block, okay. We've been in a little bit of a block for about 5 weeks or so now, just batting back and forth. And that shouldn't really be a surprise based upon the sort of the shenanigans that are going on with the Brexit vote. But actually, if I just go to the euro sterling, well, then all it's doing is just confirming that, because we can see that euro sterling there for about the last 5 weeks. Once again, a bit like pound against dollar, it's just really been in a range between about 87 and 85. It's just bouncing back and forth there. Okay, it's just not really doing anything exciting if you're a trend following trader. But it's just showing us that the sort of the indecision within UK Parliament is replicated by the indecision within the sort of sterling currency markets. So, not surprisingly, when I'm looking at sterling, I also have the FTSE here. Okay, FTSE being the UK index. It's interesting to see how sterling is doing comparative to the FTSE. FTSE has been in a nice uptrend. Okay, though we did have a bit of a bad sell-off there the other Friday, but it's still just chipping away. We had some good PMI numbers. Okay, so it is still just chipping away. Okay, just chipping away to sort of see what's the see what is see what is happening. You can see that also. I'm just drawing in sort of a particular patterns as we go through. That was a nice flag pattern which has worked its way up after the inverse head and shoulders that we saw here on the daily chart of the FTSE. That's why that's what we're just looking at. As you see them, you just draw them in. But not surprising, there's a little bit of indecision and hesitation there going on in the Brexit at the moment. And that's to be expected based upon what people are looking for to happen within the United Kingdom. So that's the sterling. That's the sterling pairs there. Very simple, okay, and it's just very simple job to just set up here because you can just draw in. And if we go to the euro next, I'll show you the euro here. You can see that I have the euro here. Okay, and once again, I've got here on the top left euro against the dollar, euro against the sterling, got euro against the Canadian dollar, euro against the Aussie dollar, euro against the yen, euro against the Swiss franc, euro against the Kiwi dollar, and finally the sort of the DAX 30. The DAX 30 is the German index, and it's the biggest index in the eurozone. So it's a good reflector of the ebb and flows of eurozone movements. What you can see there is of those 8 currencies, the euro presently is the sort of is the bottom one. It's the bottom. It's the sort of it is the most. It's the sort of the weakest of the currencies, and it's not a surprise to see that actually the price action has been sort of showing that off as well. We can see there that euro Canadian dollar there has been a nice downtrend. Euro dollar. Euro against the yen has been a little bit of an uptrend, but which is kind of bucking the trend. But remember, euro yen is a little bit of a proxy for risk. You can see the DAX has been rising, but the euro against the Aussie has been falling quite significantly. If you just look at here, okay, you can just see that actually how price just having been in a rather in rather a block there, okay, and rather a block there for for about 3 weeks. For about 3 weeks there, we can see that price is in block. Price is now broken out to the downside, and actually we can see that it's running there quite nicely. So that was the euro, and as I said, hopefully you can sort of see how very quickly you get a quick snapshot of what's going on with that particular currency. You get a chance to really understand where is the strength, where is the weakness, and that's something we'll look to sort of touch upon in future sessions. So I've done euro. Let's have a look at Swiss franc. Here we go. There we go, and once again, we've just got our Swiss franc profile set up with those 8 majors. So we've got the dollar against the Swiss franc here in the top left. We've got the euro against the Swiss franc, the CAD against the Swiss franc, the pound against the Swiss franc against the yen, the Aussie against the Swiss franc, the Kiwi dollar against the Swiss franc, and there we actually have gold being pretty important to the Swiss and also to sort of be to the Swiss franc traders. So it's not unusual for us to have an idea of what's going on with gold. We can see that actually in terms of Swiss franc, there's actually been a little bit of movement. I'm just going to maybe move out to daily just to have a quick look and sort of see, put into context the today's move. Okay. Yeah. So, I've got just a quick look. I've just shifted that all to the daily charts. We can see that what's been going on there. Okay. We've seen that actually, for the most part, we've seen actually a little bit of Swiss strength, but actually today we've just had a little bit of a movement there. Okay. Remember, sort of the Japanese yen and the Swiss franc are deemed to be, they're sort of deemed to be the safe havens within the FX markets. Yen because it's backed by deposits, Swiss franc because it's backed by gold. So when people get nervous, it's not unusual to see money race to the Japanese yen and the dollar Swiss franc. And we've certainly seen that over the last week or so, that people have run towards the yen and the Swiss franc. So kind of curious to see that sort of people do that. But what we have here is just this gives me an opportunity to sort of have a look at what's going on. Is it a case of that that sort of Swiss franc strength trend is coming to an end, or was it just a little bit of a blip? Was it just a bit of a blip, and that actually you and your used to know better, and you're actually able to operate better in that way? So that was Swiss franc. Let's let's go to Japanese yen now. Okay, so the next safe haven, and it is quite simple. You just save these profiles. Okay, just set it up, save the profiles. It just reflects all of the major 8 currencies. You've got dollar yen, euro yen, pound yen, Aussie yen, CAD yen, Swiss yen, Kiwi yen, and of course the Nikkei itself. So what I've done there is I have there's a bit of let's say a bit of replication of effort because the currencies are drawn up and effectively they're effectively sort of they're sort of drawn up, and it gives you an opportunity to take that snapshot. Okay, that's all I'm looking for. I'm just looking for the yen snapshot. That's it. So I can have an idea of where should my bias be during this session? What should I be particularly focusing on? What's interesting is that on the yen pair, we can have a look at the daily chart. Let's just as we do a bit of go. Just gonna pull that up there. That's the yen chart. This is the daily yen chart. Okay, so we can see it's been a little bit of a movement, and what's kind of interesting is that we're seeing just the strength of the correlation between the Nikkei and the Japanese yen. Remember, Japan is a global exporting economy, so their companies, their Japanese companies, are effectively focused very heavily on sort of trade, okay, and they're well traded, providing the details for them. And so they're very, very sensitive to exports. So what we find is when the yen goes up, the yen strengthens. Well, then actually what we'll see is the actual Nikkei drop because of the inverse correlation. The yen goes up, that means the yen is more expensive. Well, invariably that means less people want to buy Japanese product because it's deemed to be too expensive. So there is definitely an element of a fine line between two and fighting. It's definitely something to be sort of taken into consideration, and it's definitely something that we will look at in terms of the looking at correlations. We will definitely have a look at that in one of the future sessions because it can actually be very, very useful indeed. Okay, so that was Japanese yen. Let's have a little look at the sort of the condols as well. Let's start with the Canadian dollar. Okay, so here we go. We've got our profile set up for the Canadian dollar. We've got dollar Canadian dollar, euro Canadian dollar, pound against Canadian dollar, Aussie against Canadian dollar, CAD against the Japanese yen, CAD against the Swiss franc, New Zealand against the CAD, and then once again gold itself. Okay, why would I be interested in gold? Well, of course, Canada is a main exporter of commodities, so things like gold, oil, etc. It's very closely linked to. So, hopefully what you can see is that, Canadian dollar's had a bit of a struggle month, but actually over the last few sessions has sort of just clawed back a little bit of dignity, we would say, and that in the way that price has operated. And as I said, once again, it's just given me a bit of a quick snapshot about, what's going on, but allowed me to understand, where we are and what's actually happening and what I should be aware of as a trader so that I don't get blindsided, because there's nothing worse than getting blindsided. I'm sure all of you who are joining us, you will have had some experience of trading, and so you'll recognise that what it means like to get blindsided, but also to be in the right place and to ensure that your setup is set up correctly so that you're able to knowledge succeed faster based on the knowledge that we are sharing with you here. So that was Canadian dollar. Let's have a look at Kiwi dollar here. So same old eight charts, okay, nicely put together so I can look at them very quickly. Kiwi dollar here at the top left, euro against New Zealand dollar, pound against New Zealand dollar, Aussie against New Zealand dollar. Kiwi against the yen here bottom left, Kiwi against Swiss franc, Kiwi against the CAD, and then once again gold is there to provide you. So if I just look at pound against US dollar, sorry, pound against US dollar, Kiwi against US dollar, I do apologize. But actually, what we are looking at here is how that price has started to sort of coil up there. Okay, I'm just going to sort of put that in there. Okay, so it should be there. So what we're looking at there is I'm looking at the New Zealand dollar against the US dollar on the daily, and what I see there is that I see prices coiling up. Okay, prices getting tighter and tighter. It's like something's under a heavy spring. It's just like jacking it up for me. And to make myself even feel even worse, I've got a couple of friends from the mess itself here, to look at, and whilst we look at the picture of the Kiwi dollar, and we're just waiting really for this to look at blowing and looking at sort of blowing and breaking and going in our way. This is interesting because what we have is, the US dollar has strengthened and the Kiwi dollar has weakened. Kiwi dollar has been particularly strong the last few weeks. But actually, what we looking at there is to see, are we getting a little bit of a breaker? Are we? We talked a little bit about in the past about kissing the trend line goodbye. Is that what's actually happening here? Are we going to get a little bit of a breakdown from this coiling up? If I look at it on the weekly chart, here we go. I'm just going to put this on. What we have is, you can see on that weekly chart there, okay, it's a supporting trend line there, okay, it's supporting trend line after the collapse in the Kiwi against the US dollar last year. What we've got is a little bit of support there, and we're sort of back into this area, back into that, that sort of block there. Price is coiling up, okay. It's like a coiled spring. It's getting ready to burst, okay. It's getting ready to sort of explode. And that's your job as traders, to find ideas like that, okay? Just to start to add them to them, start to get a picture in your own head of what is particularly going on. Hopefully, you can see that all there. You can see that actually it's actually sort of working very well. And that's, as I said, just add that to your watch list. It might not be ready to trade today on a sort of, let's say, a long-term position basis. But, it's definitely worth adding to your watch list, because that might be something that shows up very nicely in the next few days and weeks as a trading opportunity for us. So that was the New Zealand against the US dollar. So let's go and have a look at the Aussie. Okay, Aussie dollar there. So once again, you know the score by now. I've just set it up. Aussie against US dollar here on the top left. Pound against the Aussie dollar here. Aussie against Canadian dollar. Euro against the Aussie dollar. Aussie against the yen. Aussie against Swiss franc. And Aussie against the Kiwi dollar there, which has been a bit of a shift. So it's kind of looking at that, just seeing what's going on. Aussie dollar has been a pretty, for the most part, 2019 has been a pretty limp performer. Really, it's just been more interested in sort of sitting in the changing room, wearing its kit and studs, but actually not wanting to sort of go out there and make a sort of difference. And so Aussie has been a little bit of a whipping boy. It's been sort of a bit of a knocking about, bouncing about, really. Thing we can just see that those charts there are there's nothing really there sort of jumping off the page at us to get us terribly excited. Kind of looking and interested in is the Aussie New Zealand dollar here. Let's see, have a little look at that. Okay, so I think I've covered this on a couple of sessions for Admiral, namely that what we saw was, as the Australian dollar was much more dovish about their height rate cuts, and actually we're talking about how they may actually end up being forced to cut height rates. That all has an impact on FX markets, understanding the dynamics between the actual traders. So, what we can see, and I talked about this on the Mastering the Forex webinar a few weeks ago, and also on the sort of how that's playing out. And I said that I was actually kind of like looking forward to could price rally up to around about here, around about this level, round about that's kind of the sort of 104.50 level, just to keep us an eye on there, okay? Just to sort of look and see what's there. And here I'm going to be looking at, will there be any good bearish rejection candles that would allow me to sort of, entertain a short position back down to those recent lows. So I'm just keeping an eye on that, okay? Because it's a daily chart, I just don't have to look at it every 5 minutes. I can just look at it once or twice a day, and it actually doesn't change that much. So that was the sort of, let's say, the 8 major pairs plus the dollar index that we've just taken a look at. What you could do is there might be there might be particular instruments or particular currency pairs that you might actually like. Maybe maybe you're a fan of the Brazilian real or the Turkish lira or the sort of Swedish krona. What you can do is actually take them and start to utilize and make them into another profile that will actually just sit there for your FX pairs that actually you could sort of just put into, you could call that the exotics stuff, just to remind you what's going on, and just look at those different pairs, because I can assure you that the pairs there will also have a leading indicator of some sorts to the other pairs, the other FX pairs, and how they operate. So there we go. This is the profiles are set up. This is what I use when I do the real-time daily trading ideas. Okay, this is what I'm looking at. If you've joined me, you'll see me that I will just go to these just to see, give me yourself a quick look at what's going on in that currency. Sometimes I look at that currency and I don't actually know what's going on, and that is absolutely fine. When nothing's happening, you just do nothing. That's the smartest thing to actually do. When there's nothing going on, you do nothing. But just having these and being able to sort of scroll between them just gives me fantastic insight very, very quickly into the way I want to be looking at charts going forward. So there you go, ladies and gentlemen. I hope you found that useful. I hope it helped. I hope that you you're all keen as mustard to start sort of learning the Paul Wallace way there. That's be there, and this recording will be up there here for you to watch over the next 24 hours or so as the recording is done. Thanks very much for joining us, ladies and gentlemen. As I said, real-time daily trading ideas at 10 o'clock tomorrow, and it'd be great for you to join us. We'll look at some individual trader ideas. If not, then I look forward to seeing you next Monday for the next installment of Mastering 4M's of Trading webinar. And then, of course, in the meantime, I wish you the best of success in your own trading, and I look forward to speaking to you soon. Many thanks, ladies and gentlemen.